Hello and welcome to another update video about Marathon Holdings, one of the Bitcoin miner companies. Yeah, it's finally in this support area for the wave 4. We've got two wave counts as already explained in previous videos. It showed some ongoing weakness over the last week or so, and then has broken out of the trend channel to the downside, but is now in the support area between the 50% retracement and the 61.8 retracement, which is still acceptable for this yellow wave 4, which could result in a wave 5. And overall, in the yellow wave count, we have a leading diagonal. We can never trust diagonals. Therefore, it's a very fragile chart. Yeah, I've warned about it many times. It's a very fragile chart. It's not an impulse. It's not the best setup. Yeah, and with these charts, and especially the crypto miners, in my opinion, you know, when a setup fails or certain levels get broken, I think it's just wise to know when to get out. In my opinion, a break below the $8.59 level will send it down to $5.18, and it would at the same time, in the first place, yeah, and it would indicate that the white wave count is in control, because any sustained break below the 61.8 retracement level, you know, I cannot justify that anymore as a wave 4. So it would probably be the white wave count, which indicates that off the December low, the price moved only up in an ABC structure and is now coming down in 5 waves, 1, 2, 3, 4, 5. And, you know, we could get into the region between $1 and $2 potentially, right? So it's quite a dramatic drop that is possible. Not at the moment too likely. I mean, it is likely, but not necessarily in control at the moment, as long as the price can hold the $8.59 support level. And if that level holds, the price can move in a 5th wave to round about 25 US dollars. I think that's sort of what it's about. You need to be aware that the $8.59 level is not only Fibonacci support, but it's the golden ratio. It's one of the most relevant Fibonacci retracement levels. It's sitting basically or it's located where we had previous structural support back in April and May this year, several times, several weeks. It's also located where we had previous resistance in January and March this year. So it's quite a relevant price level. And yeah, we're getting there at the moment. And I'm not sure, you know, this might form a head and shoulders pattern eventually. Again, I can really only warn. But now, obviously, we're back in an area where reward to risk is potentially favorable for a 5th wave rally to the upside. But at the moment, I cannot confirm to you that this 4th wave is over. There is no setup on the smaller time frame that would suggest that this 5th wave, which would, by the way, be another ABC structure, because at best we're dealing here with a leading diagonal, right? So also the wave 5 would be an ABC structure. But there's nothing that would suggest, there's nothing bullish on the smaller time frames, nothing that would suggest that this is bottomed yet. And I would not be surprised if it actually really tests that $8.59 level. Yeah, that's my update about Mara. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.